Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Tuesday, February the 5th, 2019, and this is the daily report for gold and silver. Although gold is trading lower today, it has been extremely resilient, currently trading off by about 30 cents at $1,319 per ounce, and that's a net decline of really 0.02%. So we'll put that in the unchanged column. Silver also trading lower, down 0.2%, a net loss of 3 cents at $15.85. Platinum down about 0.25%, $2 at $820.80. But palladium continues to rock to the upside at $1,348.10. That is a net increase of $17.70, and that in light of a stronger U.S. dollar, up about 0.25% at 95.82. Equities also all across the board, they are doing well. 172-point gain in the Dow Jones Industrial Average, 25,411. The S&P is trading about 0.4% higher. E-minis at 2732. And lastly, the NASDAQ Composite gaining about 0.75% at 7402. So traders, even though gold is trading off by about 30 cents today, I feel what we are looking at is some real resilience in terms of finding footing and support. When we look at the last couple of days in trading, we know that last week it hit that high of roughly 1330 that is here. That was followed by 2 days of lower pricing, and really yesterday made that low that came close to 1312. And as I told you, that is a very important number to us in terms of a Fibonacci retracement. That of course is a much larger sequence than the one that I've currently got up, which is why we're not seeing it. And then today, what we're seeing more than anything else is, although the market is trading off by 40 cents, we've got a green candle. And that tells me that the market has closed higher than it opened, and it is showing us some real support. It is also trading inside the entire range that we had yesterday, or these lows. If I blow this up, you'll be able to see that better. But as you can see, the body, although it's a very, very small body, is all within the range of yesterday. And we do have a lower high and a higher low. So it's truly an inside trading day. It is not a bullish harami because we don't have a long enough body on this red candle to meet the criteria of that. But I do believe that we are seeing some real support in this market, certainly at around 1312 to 1310. And I am looking for a point in time to reposition ourselves on the long side. I don't think we're going to see any kind of real severe sell-off in this market. If anything, I am still extremely bullish interim term in this marketplace. And traders, we are looking at a weekly candlestick chart of gold with two different Fibonacci retracements. The longest of the two, it's got 1370 as the high and 1167 as the low. You can see that with these lines coming out on the left. These lines on the left are also indicated by the center numbers, the 0.23% retracement, the 0.38, and so forth. We also have a much shorter sequence, and we talked about this sequence a little bit yesterday, because what we're looking at is, if we look at this as a wave 1 on our Elliott wave count, the retracement as being a wave 2, this would be the start of wave 3. And so what we're trying to ascertain is really where we would see any kind of a retracement go to. And so this retracement begins really at about 1200. You can see that on the inside, and concludes at 1331. You can also see that. So really the real critical area to watch for when we look at this shorter term move is 1300. And so this is the area that we cannot breach. If we breach it, it changes our overall demeanor in terms of having a very shallow retracement. And I think that if we have any kind of recovery, we would certainly see that recovery in this area and have the market move back up, because we have seen a 0.23% retracement from the highs that were achieved last week, that's right here at 1331, to the lows that we saw just the other day when the market traded to 1312. And so for that reason, we want to pay very close attention to how the market reacts at this point, and particularly take a look at the $1,300 level as a key level of support and secondary support at 1312. We continue to see resilience and strong levels of support at current pricing. We are looking for the proper point to re-enter the market from the long side. Of course, we will send out a special trade alert to that effect. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.